Hello my fellow freedom builders and welcome back to the channel. In today's video we're going to talk about a new company going public with a reverse merger, as we have seen it with several of these EV and alternative fuel companies in the last months. And if you remember, Nikola was one of them, starting these entire trend with these reverse mergers. So what we're going to look at today is a company called Chargepoint. And if you remember from one of my first EV videos, I was talking about a lot of vehicle manufacturers like Tesla and so on, NIO, and what I said was that there was a single company in there that was called Blink Charging, and that I actually saw a fantastic opportunity for these companies that had a huge charging network. Now, Blink got itself in a bit of a trouble, and I am not really sure if they have been able to dig themselves out of the accusations there. But at the point, I was looking for other companies also on the stock exchange where we were able to invest in a company that actually did the charging of the EVs. And now I have one. I actually found it already back then, but at that point they were not on the exchange. They had not gone public yet, but now they are going public, and that is an exciting opportunity. I can promise you that. So what we are having is we have this Chargepoint company, and it actually is a huge company already. They have been here for something like, I think it is 13 years. I think they were founded back in 2007. And what I like just from the glance of it here is that they are very much like Tesla, in the meaning that when they go public, as they do now, they already have a product out there. They have thousands of customers, they have a lot of data, they have a lot of experience. So they are not just starting out with some sort of imaginary product that have been invented in Photoshop like some companies that I'll not mention here. They actually have the real product, and they have huge customers already. So this is an exciting companies that are aiming for both private and businesses, and I'll go through the entire process today, and I'll also show you if I think this is a stock that we might want to invest in. Now, their hardware products, just to show you quickly, they have both some very low power chargers here, and up to some Express Plus, up to 500 kilowatt ultra fast chargers here. So they have a wide range of chargers. So these are actually the electricity gas pumps that comes up more and more in more and more different spots all over the world. And these are a part of the business, but only a part, as we're going to look at right here. Now, just to give you a quick glance of how big they actually is already, these are the charging points. Let me see if I can zoom here. Yes, just in the United States, in each of these circles, within this circle, there's almost 3,000 charging points. And if we are going down to California here, that is of course one of the main areas for alternative fuel. You can see that there are tons and tons of charging points here, where just normal people can drive up and charge their cars. Some of them are in some residential areas, some are at, for instance, Walmart or IKEA and so on. But what I also find very interesting, and we'll have a look at that as well later in their investors material, is that they are in Mexico. Let's just zoom out. You can see here they are up in Canada and Alaska. They have begun to develop some business opportunities down here in South America. Not so many yet, but that will be there. They actually have a huge presence in a couple of countries here in Africa, and also in the Middle East. In Europe, they are quite large. They are not so well represented in Asia, I must say, but that is probably something that will come later on. Just for the fun of it, when I saw how large they were in Europe, I tried to zoom in on Denmark. Now, I'm not driving an electrical vehicle, so I don't really have an idea of how well established these charging points is in Denmark. But as you can see, now here's a capital, so of course there are a lot here, but also out in the countryside where I am living. I'm living here in Viborg, just a bit outside. There are actually a lot of charging or charge point places you can charge your electrical vehicle just here in little Denmark. So that was a bit of a surprise to me, to be honest. But let's get to it. First of all, let's look at the chart. They are doing this reverse merger with a company called Switchback Energy Acquisition, and they have the ticker symbol SBE. I'm not 100% certain what they will be called when they finally go public. But right now, as you can see, the day the reverse merger were announced, it jumped from 10 and up to 13. That was actually not the craziest jump I've ever seen. There are some of these that have jumped several 100% just in a few days. So this is a bit of a more controlled reaction, you could say, even though they are up 50 to 60% here just within a few weeks. But they might have the potential to go a lot further. I can tell you that already now. If we look just at a quick fact sheet here, we can see that they have gotten a lot of prizes back from 2010 and onwards. Time Magazine's 50 Best Inventions, top rankings and top overall score in Pike Research, top 200 green tech companies, CNBC's Disruptive 50, and you can see it goes on. Goldman Sachs 100 Most Intriguing Entrepreneurs, Edison Award, so on and so forth, Global Clean Tech Hall of Fame, and so on, London Business Award. So they have gotten a lot of recognition already. And they have access to 100,000 of places to charge with, or the customers have that with just one account. They've already have more than 82 million charges delivered, and drivers has avoided more than almost 100 million gallons of gas. Fantastic. So they have a lot of experience. If we look at what I have here is just the Switchback Energy Acquisition Corp and Chargepoint investor call transcript when they started up. That was here on September 23rd. And one thing I like, I'll link to all this below so you can dive deeper into it yourself. But what I do like is that they are not taking on billions and billions of dollars, and they don't have billions in debt. They are taking on some extra capital here, some PIPE capital, and we'll add approximately 450 million to Chargepoint balance sheet after paying off outstanding debt. So they actually end up being pretty much debt free here. Although the demand for the PIPE far exceeded 225 million, Chargepoint limited the upside to 225 million because of the company's capital-light business model and strong balance sheet. So what we can see here is that companies like this, even though they have hundreds of thousands of places where, of course, they don't own that, they sell that to the customers or some lease it, but they have been producing hundreds of thousands of charge points all over the world. But even though they have been doing that, they are now able to pay off all their debt, and they are not really taking on a lot of new, not debt or not anything that has to be paid up front, like several hundred million dollars for a new manufacturing plant, or like in Nicola's case, they wanted 1,000 hydrogen stations that each costed $40-50 million. So Nicola's model simply demanded that they went out to find $25-30-50 billion. What we see here is that with a few $100 million, they can actually sustain and develop their company very, very well. And of course, they might need some extra capital at some point, but they also have a lot of the shares still in the company. So they evaluated an enterprise valuation at $2.4 billion, which is actually not completely crazy. But let's get into the presentation here that I'll also link to you. I'll not read all of it or go through all of it, but pretty much there are some bullet points that I would like just to show you here. As I said, founded in 2007 and has built one of the world's leading EV charging networks. And that is not a lie. They are extremely large. Maybe you remember when we looked at Blink, they were claiming, and that was one of the things they were criticized for, they were claiming that they was one of the largest networks in the world in this EV space. That is not true. They are not even close to Chargepoint. As you can see here, Chargepoint shareholders rolling 100% of the equity, 450 million proceeds net of debt, elimination and transaction fees to fund growth, and then pipe size 225 million. So enterprise value at 2.4 billion. And that's pretty much it. It's quite a simple structure. And of course, what they do is they build these charging networks for cars, for trucks, for buses, everything you can imagine that can drive and that uses electricity. As you can see here on the passenger side and on the fleet side, they are fitting with pretty much every single car brand that you can imagine. And when we go down here, they are showing us a bit about the trend. And this could be just some empty sales buzzwords here, but it is actually true. The trend is that the electrification of mobility is undisputed, with consumers and fleets adopting at record rates. If you have been following in the media for the last month, 6 months, so on, there has been a huge shift. Of course, Tesla has been a big part of that move because they had their battery day and they are really developing this new niche or this sector, because I'm not really sure you can keep calling it a niche when it is growing so quickly. And the market, our addressable market, is massive. That is not an overstatement as well. Every place vehicle park in North America and Europe, and Asia and Russia and Africa as well. The product, we sell charging software, stations and services, software attached. We do not monetize energy or driver utilization. The business model, I'll get back to that. So there's absolutely no doubt that with the extreme growth in EVs, in the EV sector right now, we see a growing need for places to charge the vehicles. And that doesn't matter if it is a Tesla or a Volkswagen or a Nikola Badger, if that ever comes out, or something like that. Every single one of these vehicles needs some place to charge it. It can be at home in your own residence, or it can be where you work, so you can charge your car while you're working. It can be at the mall while you're shopping. There will be in the future a huge demand for this. And you can see here, EVs projected to be 99.9% of new vehicles sold in 2025, and almost a third of all cars sold in 2030 in US and Europe, compared to 2.6% last year in 2019. So the EV charging infrastructure investment projected to be somewhere around $190 billion by 2030. And without saying too much, I can say that if Chargepoint can grab just a tiny bit of these $190 billion, then they are pretty well off. What you can see here is that strong capital-light growth, continued EV adoption across segments, minimal capex required to scale, meaning that they are not, it is not like Nikola that I mentioned, where they need to own the station, the hydrogen stations, that will need huge capital expenditures. Here, to grow your network, you're actually selling these charge points to the customers. So it's not like you are investing billions and billions of dollars in the network. They are selling the network and then getting money by normal day-to-day business here and leasing the software and so on. And I'll get back to that, to the business case in a second. Recurring revenue streams provide strong financial visibility. That is the kind of subscription service here. Company revenue grew 60% year on year in 2019 and projected at 60% CAGR from 21 to 26. Not many businesses has 60% compound annual growth rate over several years. That amounts to quite a lot. So at home, at work, around town, that is pretty much what I said before. There are a room for these everywhere pretty much. Whereas if you are going to have a hydrogen station, you need to build the infrastructure first. With the charging points here, you just need to make sure that you have an electricity grid that can withstand a huge demand of extra electricity at some spikes in time. So right now we have a major market commitment to electrification, and that is pretty much all over. It is in technology, automotive, energy, oil and gas, pretty much everywhere, fleet systems, and of course Chargepoint here. They are pretty sure they can provide services to all of them. Now, something that is really interesting when we're looking at what is called the qualitative fundamental analysis of a company, that is to determine if there is a market for this product and if the market is growing. And as you can see here, we have passenger EV sales, and that is the blue line here. That is projected EV sales up until 2026 here, and that is growing quite a lot. Now, commercial ports, that is where you charge your car. Chargepoint estimated $1 billion in revenue if they just have a 3% EV penetration, meaning that if they can take just 3% of the market. And right now they are extremely big. As I show you in a second, they're not comparing to Tesla. Tesla have their own network, and that is pretty much exclusive for Tesla right now, but that may change at some point. But it's just to show you that with the growth in EVs sold, we will also see a growing demand automatically for Chargepoint's products. We do have a bit of a drop here, but that is due to the virus and all of this crisis compared to this. But we are pretty sure that, or they are pretty sure that that will grow right now from 21 and forward. Here you can see that from 07 to 12, they were only located in USA with around 2,000 ports altogether. From 13 to 2016, they really grew a lot. They were introduced in Canada, and they took it from 2,000 ports to 36,000 ports here. Up until 2020 here, they have grown to 114,000 ports, and they are now in a bunch of different countries. And as you can see, forward on, they are pretty much going worldwide here. So that is great. In the beginning, it was commercial. It was at workplaces and retail and hospitality. But as you can see right now, they have added commercial properties, education, fueling and convenience, the entire fleet division, and then single and multifamily residential areas as well. And they are just keep adding to their customer base. So yes, let's have a look at what they have, what kind of products they have. What they say is that they sell hardware, recurring software, and services. So they have the charging stations, and they produce these charging stations and they sell them. But to run these charging stations and to make sure you have the right statistics and you manage them correctly, you need some software, and you're paying on a yearly basis as a subscription. So almost every time they sell at least a commercial product here, meaning that could be at Walmart or IKEA or any place where people can charge, they are also leasing or subscribing out their software. Then they have the Assure annual subscription, that is for the users. So this is for the commercial products. At the fleet products, they have pretty much the same, but they have a lot of logistics added on that they can also charge for. The vehicle scheduling, fueling optimization, software subscriptions, and so on. And then there is the residential products, that is single family and multifamily residentials, where they are selling the Chargepoint sold with a lifetime subscription. So that is so you can charge your car at home. So there is a lot of data in here, and you can dive into it yourself. I'll not go in depth with this, but there are a lot of course, again, as I mentioned often, an investor presentation like this is of course a sales presentation. So there might also be some downsides that is not mentioned here, but here they go into a bit more in depth with the hardware, with the software, and with the services they provide. And where they are making money right now on the hardware, they keep making money on the software and the services, which is great. There is a complete portfolio of products here. They are also integrated in ecosystems already, meaning that they get mentioned as a pop-up in a lot of different cars, where you can just say, I want to see the nearest charge point. They are at Google Maps. They are in Alexa. Alexa, ask Chargepoint if my car is plugged in. So that it also works together with all of these nice gadgets, as well as fleet platforms and so on. Here just some few select customers. You can see on the commercial site, workplaces and so on. 3M, Facebook, Merck, MasterCard, GM, Microsoft, Rolls-Royce and so on. And on the fleet, there's FedEx and IKEA and Pepsi, and you pretty much know most of these names here. And these are the customers they're working with today. It is not customers they will have to go out and find, and it doesn't say with a small bullet point down here, oh, these are the customers we hope at some point, maybe in the future, plan to have. As you could suspect, another company saying these are actually customers they are working with, generating revenue. So there are some branding opportunities, of course, and here we can see a lot of the numbers as how much is spent. I'll just scroll over this, and an interesting part is the market share of these network L2 charging. And as you can see, Chargepoint is 73% of this network niche here, 7 times the closest competitor, which is Semiconnect here at 10%. Then we have Blink at 8%, and there's some EV Connect, Shell and Volta down here, but that is quite a massive presence in all of the countries compared to their competitors. They don't really have any close competitors right now. So when they say they aim for 3% of the EV space, I think they're not overstating that. It is not impossible for them to get that market share. Absolutely. There are some unparalleled leadership team. Of course, they have to write that. To be honest, I have not been diving into these, every one of these, so I don't really know what they have been doing before, but you can dive into that if you want to. So of course, an interesting thing if you want to invest in the company is what the financials are. And here we can see some scaling with EV penetration, Chargepoint ports shipped annually, and as you can see here, they are a bit at a status quo between 2019 and 2020, and that is simply due to the virus. But in 21 and forward, they are aiming for some huge annual port shipment. You can also see the Chargepoint revenue here. That is also going up. That is in millions of dollars here. So they are aiming for something like a 15x of their revenue over the next 5 to 6 years. Here you can see the revenue diversity, and you can see it by North American commercial, EU commercial, and then fleets. You can see how that is positioned here by type. And this one is actually very interesting in my point of view, because down here you can see that the blue is what they have revenue from the charging stations, selling the charging stations. This is subscription and support, and that one is of course growing. Every time they sell a commercial port, a commercial charge point, they are of course almost every time selling their software and lasers and support and other services. So that part is also growing, and I think that is very interesting to see a company of this type that has a growing part of their earnings, of their revenue coming in from recurring income streams here. Now, gross margin improves as product releases stabilize and software revenue grows. This is exactly what I'm talking about. What we can see is that the gross margins are growing from 2019 and onwards, and that is simply because that this top part of this line here, it does not really cost too much. As I said, that is recurring income, and this one of course takes some manufacturing plants and sales force and a lot of stuff, physical support, but this part can pretty much be done online, and it is quote unquote free revenue. Of course, it's not completely free, but it doesn't cost as much to generate this part of the income as it does to generate this. And that means that the gross margins, of course, are going up. So that is a very nice part of the business. And you can also see that the operating expenses are dropping as a percentage of the revenue. Now, an interesting thing here is that you can see in 2020, we have a revenue of $135 million. But you can see the year-on-year growth here, 46%, 75%. Of course, these are estimates for 23, 24, 25, 26. But as you can see, with a growth of a CAGR of around 60%, you can grow your revenue from $135 million up to over $2 billion. Remember, this is revenue, not profit, but still that is quite amazing. And if you can run your business efficiently, that should leave room for some profit. We can see the gross profit down here is also growing exponentially, I would say. And the total operating expenses here, and this is what we're really interested in, the adjusted EBITDA. That is pretty much the profit. And we can see they're planning on making a profit in 2024 at $86 million. That is a 9% margin, and that will grow in the year to come. So in 26, if their estimates are fulfilled, they will be earning an EBITDA of $340 million. So that is quite amazing. However, remember that I have not really seen any estimates that are completely fulfilled 100% 6 years out in time. They can go a lot better than this, but it can also go a lot worse. We saw at the different graphs up above that there was a dip due to this all of this virus crisis here we have seen. And nobody really know how that will affect us in 21 and 22. That could completely explode and put the world on lockdown again. I don't think so, but it could happen. And then all of these numbers, of course, would be pushed out in time. No doubt about that. Again, you can see a lot of how the transaction, with the pipe, the reverse merger, how that is constructed here. Again, I'll not go in depth with that. And yeah, there are a lot of numbers, as we also saw with many of the other EVs. They are comparing their revenue growth, their gross margin, their EBITDA margin, and so on. They are comparing that to their competitors, and I think that is a bit of a funny way to do it. But because, for instance, the revenue growth, they are saying, yes, we have 45 and 45% here compared to Tesla. They only have 39%. Yeah, well, the thing is that the 39% is Tesla's estimated 2021 financials. So we can be pretty sure that the 39% is accurate. It could be 37 or it could be 41. These, on the other hand, is a 2025 estimates and 26 estimates. So again, this is 6 years out in the future. They are saying, yeah, well, in 6 years, we are planning to have a better revenue growth than Tesla has next year. And that is kind of a funny way to compare it. I could compare myself to Warren Buffett and say that, yeah, right now Warren Buffett only has $100 billion. So I'm actually richer than him because my plan is that in 30 years, I'll have $200 billion. And people would look at me and say, yeah, well, in 30 years, can you be sure of that? No, of course I can. And it's a bit of the same with this. So the same with the gross margin. Yeah, we're way better than Tesla, maybe in 6 years. And again, the EBITDA margins here are actually projected to be lower than the rest of the business. The exact same with the valuation benchmark doesn't make a lot of sense. So what do I think? Thank you for further information, and you can see Chargepoint and switch back here. What do I think of this? I think this is an extremely interesting company. And I think that if you want to jump into what I would call hype stocks in the EV hype sector, then Chargepoint is definitely a place to look. I'm not certain. I might take a very small position just to have it and to see what kind of information I get from that. But it's not really something I would pour a lot of money into. I believe a lot in the company. I believe them a lot more than I believe Blink and Nikola and all of the other hype stocks here. However, they're not really producing a profit yet. Their estimates look amazing, but so do a lot of estimates. I can easily estimate the numbers for my own companies, and I can just put some zeros behind and it look amazing. However, it doesn't have to come true. So what I think of this is that if you want to be on a hype stock, I think that the SBE definitely could be a place to go. Now, with the growth already now, I would suggest that if you buy into it, let's say you want to use my strategy where you are taking the 20 SMA and using that as some sort of exit signal, I would recommend that you go a bit further down than the daily chart, maybe on the 4-hour chart, where you can have a bit more risk control and it doesn't dip 40% before you get out. But of course, that is completely up to you. I'm not a financial advisor, but if I should give my advice to get into the EV space and some good hype stocks right now, I think that the SBE here, the Chargepoint, that is right now called Switchback Energy Acquisition Corp, I think that is an excellent place to place your money if you want to be allocated into this very risky space. You can see it jumped up here, and then in very few days it was also down 25%. So it's not anything I would recommend that you put your entire life savings into. It is a bit of a lottery ticket, but to be honest, I think this is a lottery ticket where if you are betting on Nikola, you'll have to get 12 numbers right, and here you might only have to get 5 or 6 right. There is a lot bigger chance that this one will come through. Maybe not with 1,000,000,000% profit, but I think that with the way they have grown already, they are 13 years old, they are producing a lot of revenue, they have some very good estimates, and they are quite capital light. I think they have every single possible outcome positive for them, unless something completely crazy happens with the virus or war or something like that. Otherwise, I simply don't see the EV space, the EV sector going anywhere but up. And as far as I can tell, Chargepoint is in a fantastic position right now to earn money on that extreme exponential growth. That is my opinion about it. But again, do your own research as always. But I am very positive of this when investing in hype stocks. Investing in more solid stocks that makes money, that would make me wait a couple of years until I can see that the estimates for 21, 22 have been fulfilled. But that, of course, might always send me into the stock when it has gone to 40 or 50. And that is just the downside of waiting until you can see a bit more, with a bit more certainty, what a company can produce. That's all for now. Thank you for your time, and if you have any comments whatsoever to the video, something I have overlooked, please put it in the comment section below. Take care of yourself and your money out there. Remember to subscribe and like, and I'll talk to you again soon. Bye for now.